Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market continued to balance within a range, and the 90 to 92 area, which was marked as strong resistance yesterday, has held so far. So heading into the open, we are going to be using that area as the initial resistance zone, and that is a important inflection point short term. It doesn't mean that the market can't break out and test the resistance areas above it, but it is going to be valid resistance until it's broken. And we are going to have to see some decent upside momentum and participation from the other markets and broad market strength in order to get a sustained breakout above the initial resistance zone. Now, in the event of a breakout above initial resistance, we can still technically get responsive sellers at the 97.5 to 2100 area and the resistance zone above at the 2107 to 2110 quarter. And given that we are heading into a holiday weekend, volume is probably going to lighten up, especially later in the day. So that would just add to the likelihood of a more two-sided session or more of a balancing type session. So even if you break out to the upside, the probability of today being a trend type move, the types of moves that we've seen over the last 2 to 3 sessions, is not as likely, right? So low probability that we'll get a trending move today. That means that if we break out, we can still rotate off of 97.5 to 2100, and especially off the 2106 HVN and the 2107 to 2110 quarter resistance zone. On the downside, we have support at 80.5 to 82.5, which marks the overnight low, the 81 HVN, and we will still have to see how the market is approaching that area to determine whether it's worthwhile to actually enter at 80.5 to 82.5, because if the market is coming down on a strong rejection or failure at 90 to 92, and it's coming down on broad market weakness and some pretty decent downside momentum, then the zone does not have to hold. We could revisit the 72.5 to 75 area and possibly even a little bit lower before we start attracting buyers in this market again. So 80.5 to 82.5, it's a decent zone, but it's not something that absolutely has to hold. So it is something we will have to determine in real time. Because if you look at just the recent volatility and the types of ranges we've been seeing, the average RTH range over the last couple of weeks is now around 23 to 24 points. So if you are failing at 90 to 92 and you are expanding that range to the downside, then even on a lighter volume session, you could quite easily tag 72.5 to 75. It wouldn't really take a whole lot. And even a little bit lower, it wouldn't really be a big deal. The market has moved up so much so quickly that even a pullback down to 2066 and technically even lower would not change the market structure. It would not really affect this very strong move off of 1981.5, and now we're trading at 89.90, right? It's 110 points in just a matter of 3 to 4 sessions. So it's a massive move, and that's why getting a pullback off of this area or off of one of the resistance zones above is not really going to be a big deal. Now, in the event that we break out above 90 to 92, don't think that the low of day has to be in if the breakout takes place. Now, if we are breaking out and there is broad market strength and the other markets are rallying and all that, then perhaps, we could balance at higher prices. But if the market takes off right from here and breaks out above 90 to 92, don't automatically assume that the low of day has to be in and we cannot revisit the same range. We cannot revisit the overnight range. If we break out right from here, we can still technically get sellers at one of the resistance zones above and just retrace right back down into the 90.92 and possibly even back down into 80.5 to 82.5. So our directional bias across all time frames right now is still going to be neutral. right? And keep in mind that bias is not the same thing as trend. The trend right now on the smaller time frames is clearly to the upside. The last three sessions have been extremely bullish. So, clearly buyers are dominant in control. The trend is to the upside, but the bias is not necessarily bullish because you're trading at some decent areas of resistance with limited upside potential. So our bias is still going to be neutral. So we're open to an upside move, but at the same time, we have to understand that the market's trading at larger time frame resistance, and there is limited upside potential even in the event that the market breaks out. So we do have to be cautious on long setups here, and unless we're seeing so much strength that we don't want to step in front of it. And when I say strength, I don't mean just the advanced decline. I'm talking about momentum. This is a very momentum driven market. And you've seen over the last few sessions how the NYSE tick has, for the most part, held above zero throughout the entire session. So pay closer attention to the real-time momentum situation because that is what's going to be needed in order to carry the market higher and then to sustain it higher. It's one thing to break out, it's quite another to sustain that breakout. So, again, given that we're heading into a holiday weekend, the market's already moved up, 110 plus points from the 81.5 low, and now we're tagging, bigger areas of resistance. It just begs the question whether we're really going to see a, risk on type market or a very aggressive buy side market heading into that long weekend. Just seems unlikely. It doesn't mean again that we can't poke higher, but be a little more cautious on the long side up here because a breakout attempt could fail if there's not that underlying momentum sustaining it. It doesn't mean we can't crack, but at the same time, we don't have to hold above 90, 92 if the momentum is not there. So pay attention to the real-time momentum situation. That is really going to be the tell on how the day develops. So as far as trade ideas go, up here, you have to be very careful on the long side. We're open to short setups at the resistance zones. And then if the market pulls back, we still have to be careful on long setups at support and manage those a little bit more closely because these are not, big areas of support, right? The market has moved too far too quickly and it hasn't really rested enough along the way to build any decent foundation or decent support. So the 80.5, 82.5, it's a nice little area. Doesn't mean that it absolutely has to hold. So we have to be careful on long setups, even in the event that the market does put a pullback. Now, once it gets really extended to the downside, 72.5, 71, 66, yesterday's low, obviously at that point, buy side can be more active. But we do have to be a little bit more aware of what's happening in real time because big picture, the market is simply bouncing in a massive range right now. So those are the main ideas heading into the open. Let's see how the market responds to 90 to 92. I think that's going to be a very good market tell and help us set the tone and bias for the day, and we will take it from there.